Welcome to the Aviation Insurance Podcast, the podcast that helps aircraft owners and aviation businesses learn and understand the complex world of aviation insurance and risk management. From the basic principles of aviation insurance to risk management techniques and updates on the aviation insurance market, the Aviation Insurance Podcast is your guide to traverse the world of aviation insurance. Now, here's your host, Tim Bonnell.
Well, welcome to the Aviation Insurance podcast where we talk about fundamentals of aviation insurance. And today, I wanted to just give a very high level, a very brief history of aviation insurance and how that's really applicable to how insurance is purchased and secured today, and how we can continue to address the changing risks in aviation going forward. And really, this all starts back in 1903 with the first powered flight by the Wright brothers. There at Kitty Hawk, North Carolina. And, ultimately this was a time of testing, of, a lack of regulation, training, safety, all these things in aviation. So obviously losses were high and very unpredictable risk. And so it was actually in 1911 that the first aviation insurance policies were written, and it was done in Lloyd's of London. And it was done with carriers coming together to insure risks. The first aviation insurance organization or grouping formed in London in about 1919, where a group of underwriters and syndicates at Lloyd's came together to form the White Cross Insurance Company, basically, which was, again, a group or a pool of companies coming together to spread the risks. And back then, they pretty much only offered some liability coverage for certain risks. Again, this was kind of, in American terms, the Wild West of aviation, barnstorming days, new airplanes, all kinds of trials. So, aviation, really was in its infancy. And so same thing, aviation insurers stepped up to try to address the risks as best they could. And it took spreading that risk out in order to obtain this cover. Now, it went on in the 20s through various acts of Congress here in the United States and similar, abroad, and also new regulations, in part due to the assistance of the United States Postal Service, who had put in some safety and training and internal regulations that improved the safety and predictability of aviation to a certain extent, that aviation really started to become very viable in the late 1920s. And so we saw the first insurance company in the United States in 1928 form to address aviation risk specifically. And that was done by a group bringing several insurers together to pooling those carriers together to insure the risks in a group called the United States Aviation Insurance Group. And that insurance company is still doing business today. The number of its members has changed, but they are still doing business for going on many years here, coming up on 100 years here, not too distant in the future. In the next year, 1929, the Associated Aviation Underwriters were formed, again as a pool, bringing multiple insurance companies together to spread the risk of the aviation exposures. And so we had those first two insurance companies. Associated Aviation Underwriters went on, as we refer to it as AAU, to become part of Global Aerospace when it merged with the British Aviation Insurance Group earlier in this millennium. So pooling risks together. We spread the risks by having multiple insurance companies take on that risk. And it helps address that potential catastrophic nature of aviation insurance. So that's really important concept. It's really about how do we address an industry where we have a very few number of units and with a very large potential for exposure. Because ultimately insurance is based on the law of large numbers, right? The premiums of many pay for the claims of a few. And so when you have few units and large potential damage to be, financially that exist, we have to find ways to do that and do it in a way that's profitable for insurance companies, or at least to where they don't lose money, which often they do. So the pooling and sharing the risks with multiple carriers has been a foundation since the beginning of aviation insurance. And, we go on, through aviation. We've got World War II, a lot more aircraft, a lot more trained pilots. And After World War II, into the jet age with the Boeing 707, we've got larger hull values. I think $5 million was the whole value for the 707 back in the day. And that was something that they had a hard time dealing with without spreading that risk. And then we entered the 1960s, where we saw the first commercial space launch in 1965, addressing the need for a space insurance market, which does exist today. And then we saw the introduction of the Boeing 747 in 1969, which had, an increasingly higher capacity of seats and passengers, meaning they needed much higher limits of liability. And so to do that, insurance brokers started using multiple insurance companies to quota share or take a percentage of the risk for a percentage of the premium in order to get the full limit of liability and physical damage exposures covered for the airlines and for that 747. So that concept of quota share, where we take multiple insurance companies who each agree to insure a percentage of the asset, or in this case, the Boeing 747. And so multiple insurers insuring one risk. And that is a technique still used today, not only in the airlines, but in various parts and products manufacturers and MROs, and even down to business jets today. And certainly it's coming up with higher value owner and pro-flown single pilot turbine aircraft. So quota share was an important tool that has come through this. But again, it's a method of spreading the risks. Aviation went through a lot of trials there in the 70s and 80s with the litigation involved and all the high costs involved with that. Products liability got so prohibitive on many aircraft that production decreased mightily. And in fact, Cessna shut down production of their piston line after the 1986 model year until the General Aviation Revitalization Act was signed in 1994. That was good for manufacturers. It limited their liability to 18 years, but prosecuting attorneys would still look to find money somewhere. So kind of the liability transferred from our manufacturers to our service providers, everyone down the line, parts manufacturers, maintenance repair overhaul facilities, anyone who has been involved with the logbook. So we continue to need to spread risk. The values of aircraft continue to rise. The liability awards continue to soar. The number of awards continue to soar. And so aviation insurers are constantly looking to devise ways to address new risk in aerospace, aviation, and space, and to remain profitable. And part of that is in this season of getting rates increased and stricter underwriting. Rates will go up, underwriting will be strict, they will start to make a profit, and then the market will get competitive and come down. We saw that as rates, following 9/11 of 2001 soared. Obviously, there were a lot of losses involved, but the market was already lacking the profit it needed to be healthy. And so rates soared up in 2003, 2, 3, and 4, and kind of leveled off in 5 a little bit. In 2006, we saw new entrants. We went from about 8 markets in 2005, to going past, 15, 16 plus, by 2010. Rates came down and we enjoyed a soft market of declining rates and very loose underwriting from 2006 to about 2018, where reserves got too low, awards and expenses kept growing, rates were a fraction of what they were previously, and insurers were losing money. So we've been in this cycle of increasing premium, stricter underwriting, and so that has led to the need to share additional risks with using quota share more often, using more companies to share the risk. And so we deal with new technologies as this comes up. So we've had to look at, how do we ensure UAVs and UASs as they grow, as their role grows into aerospace with their interesting liability exposures, as we face new war risk exposures. And that's a long story in and of itself. As we look at some of the aircraft confiscation issues that has happened with Russia in the last year, as this is being recorded, and the potential impact that could have with over $10 billion in whole values potentially lost in a war risk and allied perils or contingent market for those aircraft that are leased to the airliners. That's a long story, but at the end of the day, aviation insurance has constantly been innovative in spreading risks and finding ways to effectively insure the growing and changing risks that's associated with the aviation industry. And I think that's the key that we want to take away. We've got the issues and challenges with having a small number of insurable units with a very high loss potential in terms of dollars, and not to count the physical bodily injury that's possible. Aviation is safe in general, but when those losses do happen, they can and tend to be very significant. So aviation insurers are continually stepping up, spreading risks, trying to constantly improve their underwriting to achieve a profit and yet remain competitive. And that's how the aviation insurance industry has continued to grow and adapt for over 100 years, and how it will probably continue to adapt and innovate and serve the aviation industry in the decades and millennium to come. Well, that's all for this episode. Join us again next time as we continue navigating the waypoints in aviation insurance. Until then, enjoy clear skies and unlimited visibility.
Thanks for listening to the Aviation Insurance Podcast. If you found this episode of value, please share it with someone who would benefit from this information. Don't forget to subscribe in your podcast player so you don't miss any new episodes, and to help our show have more impact. This episode is brought to you by Aeris Insurance Solutions, your flight plan for navigating the turbulence of aviation insurance. For more information, visit aerisinsurance.com. That is www.aerisinsurance.com. Disclaimer: these episodes are for educational purposes only, and due to the changing regulatory and legal nature of the business, some information may change over time. Having a well-educated and experienced aviation insurance broker on your team is an absolute requirement to success in business and for managing your aircraft and aviation business risks.